In this situation, attention focuses around the mid-35 level. The strength of the breakthrough below this lower boundary is confirmed with the sustained sharp decline of the Chaikin Money Flow indicator before, during, and after it crosses below zero. Sustained bearish sentiment is indicated with the indicator remaining on a downward slope, which is of course on a flatter trajectory, since larger red-bodied candles and increased red volume naturally become more sparse following the initial break lower. It is normal to see this kind of situation where the Chaikin Money Flow indicator begins to incline up towards zero, but failure to rapidly surpass and maintain the incline over zero means even though the indicator technically went over zero, it was not a decisive bullish indication of a continuation higher. Then here's one drawback of the Chaikin Money Flow indicator, which is it doesn't account for gaps. See, price technically went down, but the indicator went up, because it only focuses on the price movement of the candle and not in between candles. So in this case, values drastically increased since the gap down candle was actually a large green-bodied candle with exceedingly high green volume. In this next scenario, price gaps up, but the indicator mostly remains flat to bearish. That's because the gap up candle is red with high red volume, but it's mainly a doji type candle with less directional movement. However, there are a series of large red bodied candles after it to drag the indicator lower. Due to this disregard of gaps, Chaikin Money Flow is temporarily thrown off in comparison to how price is actually moving.